We just saw today the head of the central bank in Brazil endorsing Bitcoin technology. And so the fundamentals are really good. We just had Larry Fink, and BlackRock, in essence, endorsing Bitcoin by saying that they're going to sell their institutional customers Bitcoin on the BlackRock private wealth management system. So what I see is Bitcoin emerging as a institutional investment grade asset being embraced by regulators, legislatures, and large scale investors.
Hey guys, welcome back to the channel. Today we have Michael Saylor on Bitcoin's next move and the impacts of the coming crypto regulations. Saylor says that because the market has bottomed, then gone back up, this is super important for short-term traders because volatility is increasing. On the other hand, if you have a weak balance sheet, it will be ruinous for your income. Saylor believes that the market has been taught through the crypto crash, and people now know the difference between the good, the bad, and the ugly of the crypto system. Because of the brutal and efficient education of the financial market, the asset class and the institutionalism of Bitcoin will mature, which greatly benefits Bitcoin investors and the financial ecosystem. Let's watch this interview with Michael Saylor as he gives his prediction for the future of Bitcoin and the upcoming crypto policies. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
And now the market, I think, has probably bottomed, and it looks like it's just looking much better. It's gone from 17,000 up to 24,000 now. But I make the other fundamental point. If you're a short-term trader, this drives volatility, and this is very meaningful. And if you had a weak balance sheet, this is devastating. And if you trusted any of the crypto wildcat banks, right, it's tragic, right? Anybody that put their money in Voyager or Celsius or the like, or gave money to Three Arrows, is awful. But if you look at the fundamentals are you have the head of the SEC endorsing Bitcoin as a commodity. You have the head of the CFTC, ready to endorse Bitcoin as a commodity. You have multiple senators endorsing Bitcoin as commodity. And the entire market's been very educated by this crypto crash. Now it's obvious to people the difference between, the good, the bad, and the ugly, right? The good would be a stable coin backed by cash equivalents that are transparently published every week, like Circle, right? The bad might be a tether, which it works and they're competent, but it's opaque. And the ugly is the UST that just completely melts to zero. And you could likewise say Bitcoin is the good, right? It's a digital commodity, decentralized, with no issuer, without counterparty risk, non-sovereign store of value. And then you've got all the other creatures, many of which are unregistered securities. And this has lit a fire under legislators and regulators. I think they're going to accelerate all their regulatory initiatives. And that is educating the market. And ultimately, you have hundreds of billions of dollars that wants a long-term store of value because currencies are crashing everywhere in the world. And the thing that holds anybody back from buying Bitcoin is uncertainty about its classification and the way it will be treated by regulators. So as the regulation gets clarified and as people get illustrations of the difference between Bitcoin and Luna, right? It used to be people aren't quite sure about the difference. Well, in fact, a lot of people thought DeFi is better. You get a 20% yield on your DeFi and Bitcoin is dead money. And now they realize that, there is a counterparty risk to pursuing this. And this has educated the market, very, very effectively in a painful way, but in a rapid way. And I think it'll catalyze the maturity of the asset class and the institutionalization of Bitcoin to the benefit of the Bitcoin holders and the ecosystem.
Saylor says that even though the worst is over with, the industry hasn't yet been resolved. Because we have gone through an essential deleveraging, people will be more cautious in their perspective of things. Saylor says that many people need to be educated on necessities such as basic risk management, counterparty risk, and the difference between a security and a commodity.
So I think the worst of it is behind us, but I don't think that the industry has been clarified or completely rationalized yet. I think that there's thousands and thousands of cryptos that need to disappear, right? I think there's a 99% rationalization rate that needs to happen. And so I just think we went through an pretty important deleveraging. And I think that people will be much more careful in the way they view things going forward than they were a couple of years ago. I think we were in a Wild West stage the first decade of the industry, and I think we need to grow. We need adult supervision in the industry, and there's an entire generation of people that need to understand counterparty risk and basic risk management, and they also need to understand the difference between a security and a commodity. And with all due respect, there's still a lot of people that don't really understand the ethical or legal difference between a security and a commodity. And until they grasp the nuance of how you create a digital commodity, they're not going to grasp the way to segment the market and the right way to think about all these assets. And I think that we're still early days. I think that the institutional interest in Bitcoin has dramatically jumped in the macro community and the hedge fund community over the past year. I think you can see in the body language and the rhetoric of J.P. Morgan and Goldman Sachs, Jamie Dimon, and the way that David Solomon speaks about this, and the way that BlackRock speaks about it, and the way that Ray Dalio speaks about it, and the way that George Soros speaks about it. You can see that we're no longer at the stage where people are skeptical that it will continue to exist or skeptical of its value. I think it's now got the grudging respect of a lot of people. We're really more at the stage where we're waiting for regulatory clarity. There's just a lot of political debates, at the DC level. Over how much friction will be in the space. I think the banks would like to see more clarity from banking regulators about how much they can hold on their balance sheet and what the reserve ratio would be. And I think the accounting treatment clearly has been a liability for large institutions, because indefinite intangible is always going to understate the value, and it's also going to create it's always going to create confusion, because I could hold $1 billion and you could hold 100 million, and we would both look like we held 100 million, and you would have to dig deep into my financial statements to know the difference. And so it just makes everything hard and opaque. So I think that we have more adoption to come, and every single thing that happens, every time that there's an advance from the FDIC or FASB or CFTC or SEC or Congress, I think all those things are catalysts for adoption, and we're going to see more institutional adoption as time goes on.
Saylor has observed that institutional interest in Bitcoin has increased substantially in the macro and hedge fund space since the previous year. We have exited the period of people questioning Bitcoin's value and its permanence. Now we are only waiting for regulatory closure, which will lead to more Bitcoin adoption. This is because many rules about holding crypto need to be clarified, and institutions need a way to participate in the market. Saylor says that every development from the FDIC or Congress is a stimulant for crypto acquisition. He says that we will be seeing more institutional adoption of Bitcoin as a digital asset in the future. What do you guys think about Michael Saylor's prediction of the outcome of the coming crypto policies and regulations? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.